Good day and welcome to the D-Marq-AnalyticS channel. Today we're diving into 4 Asian stocks that we hold long-term: Mitsubishi Electric, Hitachi, Alibaba, and Xiaomi. These companies represent industrial strength, digital innovation, and consumer reach across Asia. Let's break down what they do, their deals, financials, performance, and why they complement each other in our portfolio. To begin, we would like to note that this is not financial advice, nor is it claiming that you should invest in stocks or ETFs mentioned in this video, or in the stock market as a whole. We are merely speaking about some good choices that we have personally invested in, based on the current and historical numbers, company financials, and understanding what each company does, and how investing in such stocks complements our other holdings, rather than introducing redundancy or over-concentration. The first stock in today's video is a Japanese stock, Mitsubishi Electric, MIELY. What they do: a diversified Japanese industrial giant in factory automation, energy systems, semiconductors, elevators, HVAC, and defense tech. Recent deals: acquisition of AG Melco Elevator, joint venture with Bitzer for HVAC compressors, new HTHIY power modules for EVs, joint development deal with Taiwan's HTHIY on high-capacity power conversion systems, and partnership with XIACY and Hankyu on Manila Rail Energy Project. Financials: market cap $59 billion, revenue $38 billion, net income $2.7 billion, PE 22, dividend yield 0.66%. Performance: stock up 71% YTD, outperforming Nikkei. Mitsubishi Electric has a revenue growth rate forward of 30.52%, gross profit margin of 31.16%, an Altman Z Score of 3.77, revenue of $37.94 billion, with negative debt. Narrative: positioned at the intersection of automation, electrification, and infrastructure modernization. The second stock is also a Japanese stock, the industrial conglomerate Hitachi, HTHIY. What they do: a Japanese conglomerate spanning digital systems, green energy, rail, industrial machinery, and IT services. Recent deals: partnership with OpenAI for AI infrastructure, collaboration with Google Cloud for AI agents, and NVIDIA integration in rail systems. Financials: market cap $137 billion, revenue $68 billion, net income $5.4 billion, PE 25, dividend yield 1%. Performance: strong earnings growth, EPS up over 100% YoY. Hitachi has a revenue growth rate forward of 85.97%, gross profit margin of 29.46%, revenue of $67.80 billion, with negative debt. Narrative: a social innovation company driving AI, energy transition, and smart. The third stock is Chinese Alibaba, BABA. What they do: China's e-commerce and cloud leader, with platforms like Taobao, Tmall, AliExpress, and Alibaba Cloud. Recent deals: landmark AI chip partnership with China Unicom for a $390 million data center, positioning Alibaba as a domestic AI hardware supplier. Financials: FY 2025 revenue $137 billion, net income $17.8 billion. Performance: stock $158, recent rally fueled by AI chip momentum. Alibaba has a gross profit margin of 41.17%, $18.15 billion of cash from operations, revenue of $142.16 billion, with negative debt. Narrative: beyond e-commerce, Alibaba is becoming a critical AI and cloud infrastructure player in China. The fourth and final stock is Chinese Xiaomi, XIACY. What they do: consumer electronics powerhouse in smartphones, IoT devices, wearables, smart TVs, and now EVs. Recent initiatives: expansion into smart EV manufacturing, continued dominance in IoT ecosystems, and global retail expansion. Financials: market cap $70 billion plus, revenue $50 billion range, strong growth in IoT and EV segments. Performance: stock $27, up 2% recently. Xiaomi has a revenue growth rate forward of 30.22%, gross profit margin of 22.23%, an Altman Z Score of 3.80, revenue of $63.12 billion, with negative debt. Narrative: a hybrid of consumer tech and industrial innovation, bridging hardware, software, and services. Why they complement each other. Industrial backbone: Mitsubishi Electric plus Hitachi anchor the portfolio in automation, electrification, and infrastructure. Digital scale: Alibaba provides exposure to China's e-commerce and cloud ecosystem, now expanding into AI hardware. Consumer reach: Xiaomi captures the fast-growing middle-class demand for affordable tech and IoT, with EVs as a future growth driver. Portfolio synergy: together, they balance income stability, Mitsubishi, Hitachi, with growth potential, Alibaba, Xiaomi, while aligning with megatrends like AI, automation, and electrification. In closing, these 4 Asian stocks give us diversified exposure across industrials, digital infrastructure, and consumer tech. They're not just standalone plays, they complement each other and strengthen our portfolio's resilience against global shifts. If you enjoyed this brief, quick breakdown, don't forget to like, subscribe, and share your thoughts on which Asian stocks you're watching long-term. We would like to thank you all for staying till the end, and we wish you all have a successful investment journey. For more content, kindly like and subscribe.